Welcome everybody back to the Howard Keating Show. We have a real distinguished guest here right now. We have Charles Tansey. He is Senior Vice President for XM Bank, specializing in the small business arena.
Right.
And this gentleman has done an awful lot to help small businesses grow. And this is the company that we really got to focus on and get behind as a tool for us all to grow. Remember, when we go exporting, we're creating jobs, we're creating better opportunities, we're creating relationships all over the world. And there's millions and millions of businesses out there that would like to team up with the United States small businesses. But we got to go down this path. And I know you've been down the path and you've heard from the chambers and trade associations. I understand your anxieties with that. They are managed on a national basis by big business, but they do have good chapters out there that are worthwhile. And we're here to help you get the sales, a profitable sale, affordable financing. And this gentleman here is going to help us and help you understand how we can get better financing, affordable financing, but also we got a marketing tool that is just spectacular. Charles, welcome to the show.
Thank you. Thank you, Howard.
You've been there with XM Bank for how long?
For 1 year.
1 year?
Yep.
What did you do in your prior life?
I was a corporate banker in New York for about 14 years, and then I spent the last 20 years in community development, which is low-income communities, low-income constituencies, developing models for banks and insurance companies to invest.
So you know the street. You see you know what it is like to work with these small businesses.
Yeah, for a period of time, and during my career, I was helping severely distressed small businesses find banking. And that was an interesting challenge because a severely distressed small business typically will not find a bank. They will find a mezzanine lender or somebody else if they can find anything.
It's tough out there, Charles, when you start thinking about we've lost so many banks today. There seems to be very little competition, and they've been bailed out by the government, some of these bigger institutions, but the effect coming down to help small business is not there yet. There's a lot of intent and a lot of conversation.
The challenge for small businesses is precisely this, that they are small. It is hard for a bank to make a lot of money or to make sufficient money or even a decent return on capital, which their regulators want them to have, which their investors want them to have. It's hard for them to make money on developing, cultivating a small business loan. Now, there are banks that can do it, that are structured to do it, but it's not a standard run-of-the-mill kind of activity. You've seen a change in the banks in the last 15 years or so, where in order to make it profitable for them, they have gone to mass mailing and credit scoring, and they've moved out of the decision-making out of the branches, etc. But it's still a touch-and-go thing for the banks.
It is a touch-and-go, and somehow we got to help them feel more comfortable. And maybe one way to do it is to have set up a process in these banks where they can do more. Instead of just doing onesies and twosies, they can sit there and say, like a title company does, they handle very upgraded homes, they handle low-income homes as well. But they have a process in place. Maybe that is a solution that would help.
Well, having a process is absolutely key to it. The two big challenges to the banking system, and they persist, actually they're more now after the 2008-2009 crisis than they were prior to the crisis. The two big challenges are the operating cost for delivering a loan or delivering credit is substantial for the deal size. That's number one for the bank. Number two, and this is something that's evolving, emerging, capital requirements by the regulators on the banks, the kind of capital they have to maintain against that loan on their books is going up. It's going to cost more for small businesses. They're going to have a harder time going forward, all things being equal, because of the tightening regulations. And I think everybody's taking a hard look at that to see what the impact will be. We are. The key thing that we can do right now in the face of that is go and take care of the first problem, which is the operating cost. And the way you do that is by establishing processes that are consistent and work well. Now, establishing a centralized process does not mean that we're going to be able to take the story credit, the impaired credit, very easily. Those people are always going to have a harder time getting at credit.
But that process makes a lot of sense to me, because once you have, so to speak, like I come from Detroit. Henry Ford he didn't invent the car, but he invented the assembly line.
Right.
And title companies have invented an assembly line for title insurance and financing and everything else. And that seems to work really well.
Right.
And if we can employ that in the banking side of it, it does give more opportunity, because yes, if you're doing small volumes and small numbers for a big bank, it's not there.
Right.
Okay? And I do know that small business, from our standpoint, we don't care if we charge a little bit more, we got to get the deal done.
Right.
So the process is one way to take the risk out of this whole thing and streamline it. But also, when we look at big business, without small business, there's no big business. We all are interdependent, aren't we,
yeah.
Charles?
Well, I find it amusing that actually when I started my banking career, two of my largest customers were Pan Am, which is the world's biggest and best airline, and International Harvester, which was the largest manufacturer of agricultural equipment. And at that time, same time, Steve Jobs was sitting out in his parents' garage in Palo Alto, playing with electric wires. And the interesting thing to me is I would not have financed Steve Jobs at that particular time, but I was crawling over a lot of other bankers to get a Pan Am and International Harvester. And you take a look now, 20, 25, 30 years later, I guess longer than that, almost 40 years later, and who's where? And that's the answer to your question is quite precise. We have to find ways to get at the Steve Jobses early on, make their job easier, getting to where they go. And the process is the key thing that we have to focus on right now. How do we do that? Big businesses have an easier process, notwithstanding the challenges to the rating agencies because of what's happened in the last couple of years. The rating agencies have made it easy for many corporations, many companies to get financing, made it much easier. That facilitates access to capital. You can't do a rating of a small business. They're too small to warrant the kind of investigation that the rating agencies require, and their credit activity is too volatile to have a systematic approach. The only way you can do small business credit profitably and easily is by packaging, bunching it, aggregating it, putting it in portfolios, and that's a process. That gets back to your issue.
Well, there's two things. We're working with Wall Street right now to do a raise for small businesses so they can get financing through XM Bank or get the guarantees through XM Bank. And we see it the same way you're talking about. We got to set up a process to do it, because these hedge funds would like to do volume. They don't want to just do ones or twos, and you can help us with that. And that would be a neat process to set up if we could do it that way. The other thing is that some of the small businesses out there, an option for you is to get a strategic partner out there that is doing business with XM Bank, that does have banking relationships. You have master distributors out there, big distributors that aggregate a lot of different products that a small business could fall under.
Well, one of the most popular and talked about financing programs right now is the supply chain finance program, and we just announced a transaction with Caterpillar, and we had one with Case New Holland back in last September. And essentially what's happening in that, if you cut away all the activity there, is the large corporation is enabling the suppliers essentially to borrow at its interest rate. And that is a tremendous benefit to the suppliers, and it's a direct it's a lot more complicated than that, but
sure,
that's
but
essentially
that makes sense.
But it stabilizes the supply chain to that large corporation. They don't want volatility. They want their suppliers to stay in place and to survive and keep their heads above water. And of course, that didn't happen in 2008, 2009. A lot of small businesses that were shipping to large businesses went under, and that doesn't help the big business. So there's a much more attention to the idea of having a stabilized and consistent relationship with your suppliers, taking a lot harder look and making sure that they're financially sound and the rest of it. In many ways, our best partners right now, certainly for this program, are large corporations with long supply chains and small businesses.
That makes sense. And, from our small business viewpoint, we got to get behind those big companies that support small business. So we're hearing about a couple of them right here. But also, we've learned what happened in Detroit, where they got the supply chain was disturbed. There's small businesses there. They got wiped out. And by the way, today, just today, we'll lose over 400 small businesses in the United States will be going out of business. So we got to pay attention to these opportunities. We got to start thinking global. We got to take a look at these opportunities of partnering up with the big businesses, because they get additional benefits. They get the innovation and the inventions that we come up with, but also there's nobody more loyal than people that are being helped by big business. We get behind them when we don't walk away. That is a neat process. So I think that's very intelligent for them to do. And as you know, we got Clayton Yetter with us. So he used to be the head of the Chicago Mercantile Exchange, as well as Secretary of Agriculture. So he's an owner of our business. So this is exciting times when you start thinking about it, Charles.
I would agree.
But where do you see this all going? For 1 minute, give us your magic ball here. Where are we going to go?
Well, in terms of exports, I'll just speak to that first, and then more broadly on the small business. In terms of exports, we actually don't have a choice in the matter about fomenting exports. Right now, we have 27 million small businesses in the country. 260,000 of them export. It's less than 1%. Of that 260,000, 60% ship only to one country. If you take a look at our size, we did $25 billion of credit authorizations last year. The Export Credit Agency for Sweden did $25 billion, and that's a country of 7 million people. The Canadian Export Credit Agency did $80 billion, and that's a country of 37 million people. So you know that they're working really hard, and they're getting stuff into our country, and they're doing a good job of it. We haven't gotten to that point yet. We've been satisfied with a very large domestic market and shipping to the county next door, not the country next door. And what's happening now is that the combination of competition from people exporting here and then other people investing here, people with really deep pockets investing here, it's going to change the terrain at Main Street quicker, sooner than we think. We don't see investment in funeral parlor chains or service station chains yet, but it will happen. It will come. And if you're in any kind of business in the United States, you have to be thinking that there are a lot of people out there across the sea who have, or down the peninsula, who have a lot of money, and they're looking to invest. And America is a great place to invest. American products are loved everywhere in the world. You're going to be competing against people with deep pockets. There's an example actually in Michigan. Last November, Saginaw Tool and Gear was acquired for $450 million by, I think it was the pension fund of the city of Beijing. And it was interesting. That's 8,000 jobs. It's worldwide, 110 facilities, and they make drive shafts and whatever, and they're going downhill. And this pension fund from overseas invests in them. And you have to ask yourself, well, why didn't the state of Michigan pension fund or city of Saginaw pension fund invest? And of course, the answer is that, it's a prudent investment issue. Pension funds have to invest prudently, and at that particular time, obviously, Saginaw Tool was not a prudent investment for them, so they would have done it. But then that begs the question, well, what is the city of Beijing looking at? Well, they're not looking at it as a matter of saving jobs. They're looking at it, there's some reason they're investing in that thing for whatever reason, technological, they're looking down the pike or whatever, and good for them for doing that. We're all happy that we have the job. So what about Saginaw's competition, domestic competition? What happens when you're sitting there competing against an entity that you thought was sort of declining, and suddenly they're associated with somebody who has more money than Croesus? I mean, what do? That's happening. It's going to continue happening. If you're not ready to start exporting, if you're not ready to get up there and do the deal, you're going to have your hat handed to you at some particular point. So we got to do it.
But hold that thought there. We're going to take a break, and we'll be right back with Charles Tansey. And he's the head of XM Bank's effort with small business, and this is the man that makes the things happen over there for all our small businesses.